Touraj, you have a long and interesting and winding career through Silicon Valley for a long time here. So you've sat in nearly every seat. You started as a lawyer at Wilson. So welcome back to a law office
Yes.
here. And you've been M&A advisor. You've been a public company operator as you are now. What made you bet the next chapter of your career on sidewalk robots specifically, rather than the dozen other AI plays you had access to through Pear and Woodside? Let's start there.
Well, great question, but thanks for having me here. Good to see you, and really thank you. So, yes, my career has been long and winding, so maybe I'll give everyone a bit of a context as to who I am and how I ended up here. I came to Silicon Valley in late 90s as a lawyer, corporate lawyer, because I wanted to work with entrepreneurs. And I loved innovation, and I still do. But the practice of law was not something that I quickly realized I'm cut for. All due respect to attorneys in the room, it's really hard work, but I wanted to be much closer to technology. I wanted to do the deals and be closer. So in 2005, actually, I started my first startup, and that was in the telecom voice over IP space. I learned a lot in that process. It was a hot startup for a while. We raised a bunch of money, and then we hit the 2008-2009 downturn. And we had to sell the company, and I wasn't able to, so it was a pretty bad ending in Silicon Valley parlance. We had to do a fire sale. But I learned a lot from that process. But I also got the bug that I wanted to do this again and see if I can not repeat the same mistakes again. And the next startup was a lot more successful. We had a great exit in 2 years. And then I kind of kept doing that and tried different industries. I even started a legal marketplace called App Council. I spent 7 years at GoDaddy before my current job, running corp dev and business development for a number of our businesses at GoDaddy. And throughout this whole process, what I've done is to gravitate and work with people that I admire. I'm not a technologist. I was a philosophy major and econ major in college. And I always pair up with great technologists. And one of my good friends, with whom I had actually created an AI startup that we sold to Postmates, had started this very interesting division inside Postmates, the food delivery company, to try and see if robots could do deliveries. And I've been kind of monitoring what he was doing from a distance. This was 9 years ago. And within a couple of years, they actually started creating these sidewalk robots that they put on the sidewalks that would do food delivery from restaurants to homes. And I was just fascinated by the technology and by what they were doing. Postmates got acquired by Uber, and that was an opportunity to spin out the company and make it an independent venture-backed company. That was 5 years ago. So when that opportunity came about, I actually helped my friend to do the spin-off and then joined him. He's the CEO, I'm the COO, so we are kind of co-leading, and we raised some venture capital money, but robotics at that time was very hard to get financed for from the VC industry. We had some good strategic backers, NVIDIA and Uber, and some other strategic investors sort of carried the day for us. But ultimately, we went public 2 years ago on NASDAQ because we needed access to a broader sources of capital, and so we are a public company now. So that's a long answer to a short question.
No, that's great. And you went public via SPAC, right?
You know, it's called APO, Alternative Public Offering. And actually, someone was just asked me that question, so I'm glad I get a chance to finish that answer. So the alternative public offering route is that you get to merge with a clean shell company. So it's the clean shell being, it's a company that's publicly reporting, but does not have any public retail investors. So it's not operating, it's not doing anything. In a SPAC situation, you have retail investors put money into a shell company, and then that shell company goes looking for someone to buy. It creates all sorts of interesting incentives, to say the least. What we did is I would say, much saner way to go public, which is you bring accredited investors, they come in with you into that shell company, and then you uplist from like an OTC to NASDAQ in an underwritten public offering. So don't need to belabor the point, but it's a very interesting process. I highly recommend it for companies that can do it. We were pretty much pre-revenue when we did that. That was another question that someone asked me. So you don't have to be generating a lot of revenue to go public, but there are some criteria, and I'm happy to answer questions about that later.
Yeah, there's the enterprise value test or the revenue test, and it sounds like enterprise value was the way to go.
There's enterprise value, there's per share price, and then you just need to have that 40 million underwritten basically offering. Yeah.
So I'm going off my script a little bit, but I think it's interesting because you did it so early. I think it would be interesting for others to understand, versus hunting for venture capital. Why did you decide to go the public route?
So, with all due respect to the VCs in the room, if there are any,
there's a few.
The venture industry seems to be very cyclical, also very trend-minded. So whatever is the hot industry of the week or the month, that tends to gobble up all the funding. At the time when we were trying to raise money, AI was getting a lot of the money. AV companies, autonomous vehicles were attracting a lot of funding. So we weren't a hot industry. And typically by the time you are in a hot industry, it's a little late to invest, but there aren't that many contrarian investors out there. So we are in the anti-portfolio of a lot of VC firms. We pretty much talked to, I think, 250 or 300 of them and got 300 rejections. So it was tough, but we realized if we had to survive, especially with hardware and robotics, you need to raise a lot of money. And that's part of what turned off a lot of VCs, because they were worried that they would fund you and then they would be crammed down by the next round because there would be needs for additional funding rounds. So anyway, that's why.
Yeah, so I mean, back in 21, when you guys spin out of Uber, physical AI wasn't yet a buzzword as it is now. And I think in part now a lot of VCs are realizing the software has no moats. I wrote about this a little bit, and physical is hard. So now Silicon Valley is coming back to physical, funding physical things. What did you guys see then that these 250, 300 VCs didn't, and how things have changed in the last 5 years?
Yeah, so as an operator, I mean, when you are closest to the market, closest to the customers, you do see signals. You do see signals in the market. We saw the fundamental economics of delivery, and the Achilles heel for food delivery companies is low margin, cost of humans. That's kind of the cost of humans are always going up. People always want to pay less. So it's just, there isn't that much margin in that business. So the only way that these food delivery platforms could become profitable and viable is through some way for them to save on that delivery cost. And so we could see that there is that massive need for this solution. And it was validated by Uber's interest in us and as other platforms' interest in what we were doing. So we were getting all the right market signals. We also had access to data because, again, this company was born out of Postmates. We saw all the food delivery data of Postmates, and we realized half of all deliveries in the US have a median distance of 2.5 miles, which makes them ideal for a sidewalk delivery robot. So it's big market, millions of deliveries a day, and but yeah, I mean, we showed this stuff to VCs as well, but they always had reasons to be skeptical. Like, could the technology really work? Could this happen? Could that happen? What we were seeing was that the cost of hardware was coming down, the power of AI was going up, and ubiquitous connectivity everywhere, broadband. Combine that with the rising cost of labor, it just made the perfect conditions for a robotics company to come into being that can solve that problem. Our tagline was, and continues to be in many conversations, why move a 2-pound burrito in a 2-ton car?
Makes sense. I mean, it's a 200-pound robot then instead, right? Maybe that. So Bessemer, speaking of VCs, you probably spoke to them then, but now they're calling right now kind of the GPT 2.5 moment for robotics. And real capabilities, but a wide gap between lab and field. Do you buy that framing? And where exactly is Serve on that curve at this point?
It's a nice way to frame it. Yeah, I think so. I think we are at the cusp of the robotic revolution. I think because of the trends I just mentioned, there's a lot of room for a lot of robotics companies to come into being. The problem really with physical AI companies, I think, is one, their business model, the go-to-market strategy, and then the boring stuff, which is the physical operational stuff. That's really the hard stuff. I mean, yes, the technology is very hard. Figuring out how to navigate in complex environments that we are doing is not trivial, but also the operational layer. Having that operational excellence that you can deploy these robots, you can maintain them cost effectively, you can ensure their safe operations, all that is a whole layer of complexity that some entrepreneurs may underestimate.
So in 2025, 38 billion went into robotics, 6 billion in just the first quarter into world model companies of this year. And China is taking 43% of global robotic VC capital. Is this a bubble, a land grab, or both? And what does that mean for a Western founder starting today?
That's a great question. I think we always overestimate the power of technology short term, but underestimate it long term. I think if you may have local bubbles, but I think the opportunity long term is massive. I think some of the funds or perhaps some of the money is over-indexed right now into humanoids. I personally feel that special purpose robots, so like we have a robot, for instance, that does sidewalk deliveries. Through acquisitions, we've actually acquired different types of robots as well. So hospital robots, they do indoor in hospitals, moving lab samples and things like that from room to room or floor to floor. We have kitchen robotics, that's another acquisition we did. I think these special purpose robots tend to be right-sized and cost optimized for specific tasks. Humanoids, they have a lot of potential, but I don't know if it's the right time for them, but there's a lot of money going into them.
Yeah, I mean, you basically, you answered the very next question I had, which was about kind of making the case for very specific robotic applications versus generalized in humanoids. But let's double click on that a little bit. There's a lot of capital, a lot of interest going into humanoids. I have my thoughts on it and biases, and I don't think the world, I don't think we need human scale robotics and everything. Very few things need human scale, and that comes more from experience in automotive manufacturing, for example, which is highly roboticized. But you're doing kind of smaller, almost personal, kind of human scale, let's say, things where you're transporting either food or you're transporting, like you mentioned, in hospital things. Do you think that the form factor, kind of the bipedal form factor, does it have a place? Kind of where do you see it really?
I feel like the arms definitely have a lot of applications more than the legs do. I think a wheeled humanoid probably has a lot higher potential applicability, but maybe my view is biased because we deal with a lot of food industry stuff and indoor environments. I feel like bipedal, if you need to climb stairs, you need to do some more trickier navigations, trickier terrains, perhaps maybe in combat applications, but that's not something that I know anything about.
I think it was in a movie, in a popular movie in the 80s.
Yeah. There is a lot of doom and gloom. Yeah, I think there is also that. There's the social acceptance of robotics is something that's going to slow down, actually, the pace at which robots are deployed. I feel like the technology is way ahead of the society. And for instance, when we roll out robots in a community, we don't just flood the sidewalks with robots. We go very gradual, to the extent that LA was our first operational domain. If you go to LA, you'll see them pretty much everywhere, especially around Hollywood, West Hollywood, downtown LA. And people barely notice them. They're just immersed with folks, and they're there. But when you first go to a neighborhood, there is a lot of reactions, some very positive, some less positive. But over time, people accept it, and then that's when robotics moves from a novelty to infrastructure, but that takes a pretty long learning curve.
Yeah, I mean, we just learned a little bit about people's acceptance of design with the Ferrari Luce this week, or rejection of design, I should say. Yeah, as a trained designer, I can tell you there's a lot of arrogance in Johnny Ive and Mark Newsom bastardizing a Ferrari. But my question is, when you're entering these environments, how much thought goes into the design of the robots to how they'll be accepted as kind of members of community?
Yeah, I wish I saw my photo. There was a photo of the robot. We are very intentional about how we design the robots, and that they are neighborly, they're welcome. Actually, the most common adjective used for the Serve robots, if you go to our website, you'll see it, you may actually think of it, is that they're cute. And it was definitely intentional. We wanted to strike the right balance between a utility and a toy, and kind of ride on mental models that people were already used to. So the size is more of a stroller or a shopping cart size, rather than like a monstrosity or something so small people trip over. So we constantly think about that, because robots, if they're not accepted by a community where they're deployed, then you have nowhere to scale or go. And we are very thoughtful about that. And then also social cues, like when we walk down a sidewalk, and you'll now be sensitized to that, so you kind of just notice there are all these cues that we pass on, even the way we look, the way we move our feet, our body, like we signal to each other where we're going, at what speed we're going, what our intentions are. And robots need to kind of blend into that environment. So like the eyes of the robot, like it actually blinks, it doesn't stare at you all the time. We have lights around the lid of the robot that kind of shows the direction of movement, subtle sounds. So we constantly tune that.
Yeah, a lot of human factors there to kind of blend it in. That's really interesting. And I think probably most people don't think about that.
You don't think about it if in a lab environment. And that's kind of one of those things that, and it's one of the core tenets of our company, is that we say truth is found on the sidewalk. What we mean by that is that you have to just put things out there and experiment in live situations. The downside of that is that you're really building a company in public. For software companies, you can hide behind your walls and kind of code and have beta and alpha and beta versions without too many people looking at it. With robotics, unless you put it out there in public, unless you're a warehouse robot, of course, I'm talking about public robots, it's harder. So yes, it's great to get the robots out there and get the learnings, but the downside is that you are building publicly. So you will go on Instagram and TikTok and you'll see all these videos about all the problems with these robots, right? But that's because that's what gets clicked on. For every one of those problems, there are so many other deliveries that are done seamlessly and no one talks about them. In fact, our robots tend to be 10 times more reliable in getting an order from a merchant to the customer than humans.
That's quite a stat. Now, there's a lot going on to make this a reality, right? This technology a reality, to be able to kind of go point to point. Where do you think the value actually is? Kind of what's the hardest part between the foundation models, the world models, simulation, hardware, or kind of the whole vertically integrated full stack operation that you guys are running?
It's all hard. But maybe the hardest part, again, coming from me as a COO, is the operational excellence part. It's really hard to deploy robots in multiple geographies, in multiple environments, different climates, different things, and different cultural norms. Even from neighborhood to neighborhood, you can have very different patterns. Different times of day, you have different patterns of traffic, people's moods, and how hurried people are, and things like that. So all that is extremely difficult, both from an autonomy perspective to tune your models, as well as from an operational perspective to make sure that you're deploying them the right way, you catch problems as they occur. So for instance, with our robots, even though they're mostly autonomous, we still have humans in the loop. And there are times that humans intervene, take over, drive the robot. For instance, in sidewalk crossings, street crossings, or maybe navigating around very crowded places, things like that. So just having kind of like tuning that physical world and AI, it's just this coming together is not a trivial problem. I don't know how to describe it. It's a hybrid problem. There's no one side that's harder, but the coming together is the hardest part.
So if you put on your VC hat again for a second, for the founders in the room, where would you recommend that they work if they're starting from clean sheet today? Kind of what part of the stack is still kind of the most open and the most problematic that needs solutions?
Well, I think most of the problems that can be solved with robots are out there for for the taking. I think that the opportunity horizon for the things you can sink your teeth into is almost unlimited. Where I would try to kind of see your personal interests kind of converge with that is not to just look at where's the opportunity, but it's like where do you uniquely have an insight into an industry that you think can be transformed with robotics. And robotics in the help of humans that are working in that industry rather than thinking of it as a replacement of the humans. For instance, with us, we think that we are actually making neighborhoods and local small businesses a lot more successful by bringing the cost of delivery down. Like this is for the food delivery equation. A lot of people don't order from their local businesses because it's too expensive. It costs $8 to $10 on average, where we think with robotics we can bring that cost down to about $1 at scale. So given that, like there will be a lot more local commerce. So I think it's kind of good to think about where can robotics truly transform an industry or really help amplify human labor, and then just go after it.
So, yeah, I mean it's an interesting place. So I think it's also important for everybody to understand the engagement model. So if I was a restaurant owner, how would I engage with Serve?
Yeah, so that's a go-to-market bit. One of the insights we had was because again we were born inside Postmates. We realized that if we had to go to each restaurant one by one and sign them up, that just would not be economically viable because the cost of signing up a restaurant would be a lot higher than what we could make from that restaurant for a long time. So we decided to just partner with food delivery platforms that have all these restaurants signed up. We are now working with over 4,500 restaurants, and that was just through 2 integrations, one with Uber and one with DoorDash. And so you have to kind of think about your go-to-market strategy and how can you put this technology in front of the most amount of people, leveraging the networks and ecosystems that exist today.
Now, let's dig into the numbers a little bit and kind of understand the scale of the company. Q1 26 revenue, 6 times growth year over year, but still kind of single-digit million revenue, and still a big loss. So getting there, but not quite there. So talking to the investors in the room about what are the right metrics for a physical AI company at this stage, right? You're public, so you kind of, as you said, you're building in public. Otherwise, companies would be still private, and these numbers wouldn't be out there. What are the KPIs that public market is getting wrong so far, that you don't think the message is coming through yet?
Well, I think public market, at least for companies at our stage, which is their future is really where the revenue, we are valued on the potential rather than what a multiple of revenues this quarter. I think that's perhaps a unique situation, but for a lot of startups, that is the name of the game. That's the same case with the venture world. I would say the biggest metric ultimately is utilization. Like, if you can not get your hardware utilized enough, then nothing works really fundamentally. But utilization doesn't have to be just a single purpose thing. And this is what I mean by that. Our robots generate revenue in multiple ways. They do let's say the food delivery robots. They deliver food and they get paid for getting that order to you, just like an Uber driver would. But then they also have the potential to have ads on them. So we have an advertising revenue line. The data that they generate can be used and repurposed and sold for other purposes. And also some of the software, things that we are actually building, like the autonomy stack, can be commercialized. We're building basically the physical AI layer that other robotics company ultimately could use to deploy their own robots in public spaces. So there is a utilization, like the more our robots get utilized in a city, the better it is for our economics, but also those other revenue lines. So for whatever use case you're thinking about, think about just not just the single purpose that the robot serves, but also what else can be done with it.
Yeah, so it sounds like you have a lot of data exhaust coming out that's also valuable. Now, you guys already crossed over 2,000 robots and are guiding to about 60 to 80 million run rate. Is that right?
Not for this year, but yes, that's at full utilization. We had said we would 10x basically our revenues from last year. That's the guidance for this year, which is going from 2.5 to 26 million, I believe.
And these are big step functions to go from 100 to 1,000 robots and then from 1,000 to 10,000. Can you talk a little bit about the step function, like what's working, and you're at about 2,000 now?
Yeah, I think each jump, each zero that you put in front of it is a massive change in even how you operate organizationally. Like 10 robots was a very different game than 100 robots, and going from 100 to 1,000 was a very different thing. The problem is in robotics is when you have more utilization and more robots, the corner cases, the edge cases are no longer like outliers. They become what actually determines the success or failure of your business. And we've seen it with some high profile examples. Like one bad incident can really be lethal for a company. So, so the more basically robots you have out there, the more you have to be confident in those edge cases, and that you have pretty good tight control over the safety and the behaviors that wouldn't manifest themselves, let's say, when you have 10 robots or 100 robots. So that's what really makes it hard. Yeah, that the stochastic kind of variability on the outcomes. That's the toughest part.
Yeah, I can imagine. It's a lot of risk. The perception in public anything that happens will be blown out of proportion quite quickly. Now, if we shift gears a little bit, you already mentioned that you made a couple of acquisitions. So Diligent in healthcare, Vibu, is that right?
Yes.
In the food automation, yeah. And these acquisitions seem like a bit of a pivot from sidewalk delivery to more of a platform, kind of a classic land and expand. How should founders think about platform expansion versus focus? And when did you know that Serve was ready to widen the aperture?
Yeah, I think our vision always was to build this physical AI layer, and we felt that at some point, that was about 18 months ago, we had enough of a handle on what we were doing with the sidewalk delivery that incremental forays into different verticals would be additive rather than distracting. So again, we started 9 years ago, and so it took us 7.5 years to get to that stage. For a lot of people, when they see the corporate history, they may think that we're a 5-year-old company because 5 years ago we spun out and became independent. So we were established as an independent company 5 years ago, but the history of the company is a lot older than that. So yeah, I think each company will have to decide for themselves, but we found actually these acquisitions to already be so synergistic and so helpful because we have this data flywheel. Like basically the indoor robots and the learnings that they have, the corner cases that they have encountered in indoor environments can actually be quite applicable to the outdoor and vice versa. So data and more data you have around these things, as you know, is better to train your AI models. And so we had reached that scale where we felt that we are ready to take that leap, and it seems to have been the absolute right time.
Now, you touched on data a little bit already, and it seems to be a moat in the category. Do you track things like training cost per mile, for example, and is teleoperations a bridge for now or something that is kind of permanent part of your model? Do you think there's going to be always room for human in the loop?
Yeah, we track things like cost per supply hour. By supply hour, what I mean is how many hours is a robot available to do a job. So that is a metric that's independent from utilization. So you have to fix that, make sure that at least your robot's cost per hour is within your financial model's boundaries. And then the more utilization you have, then you can basically bring the cost per task performed down as well. So we have so many metrics that we track. Of course, we don't publish them publicly, all of them, some of them for competitive reasons, etc. It would just be confusing if we put it all out there. But we track a lot. And especially whenever there are deviations, it's very good to have different views of the data so that you can figure out the root cause a lot faster. But what was your latter part of the question?
On the teleops, is that something that you think is permanent?
Teleop, I think, will always be there because I think the corner cases will always be there. For us at least, teleop is a nice complement to the scale up of a fleet. Knowing that human can intervene and take control is very reassuring. And reassuring not to just ourselves, but also to the local governments, where sometimes we have to get their permit or blessing. The good thing about sidewalk robotics is that there aren't that many regulations in place, like the road vehicles. But we do take a proactive approach, and we go and talk to municipalities and tell them about what we're about to do. And we kind of basically take them through a tour of everything that happens and how we address corner cases, etc. Having that human in the loop or ability for a human to intervene is always reassuring.
Yeah, absolutely. Now, let's talk about Maggie a little bit, your conversational robot that you're doing with T-Mobile and NVIDIA. Something like that hints at a lot of infrastructure that has to be put in place for that. Can you tell everybody a little bit about that and how that works and what had to happen to make it work?
So Maggie was basically a demo robot that we showcased at the GTX conference with NVIDIA just a couple of months ago. And basically, let's say it's an LLM that runs on a robot and you can interact with. So the ultimate vision would be, it wouldn't be awesome if these robots that are on the sidewalks, you could actually talk to them and they could talk to you and you could say, hey, they could ask you to push the crosswalk button for them. That's one of their Achilles heels right now because they don't have the arm to do that. Or they could say, excuse me, like it's behind you or something, so they could not startle you. So that's a vision. That's a concept stage still. We would love to be able to deploy that to the whole fleet, but it does take considerable thought and effort, and I don't know how far we are at that because I'm not that close to the project, but it's exciting.
Yeah, I mean, so it's either it does a round trip via 5G or you're running it locally at the edge, right?
Yeah. I think both are options on the table, and we have to basically test those in different, and it could be that in different environments we'd have to use one versus the other or redundancy. But those are great questions.
Yeah, it's fun. So shifting gears again, I wanted to give you a chance to plug your book. You literally wrote the book on exit strategy.
Thank you.
So in the category where, Bessemer, again, quoting them, they're calling for the first 50 billion plus defense robotics IPO. And China is producing serial robotics IPOs already. What does a smart exit path look like for a physical AI founder starting today?
So I'm a big fan of strategic combinations. And I feel that every startup should have a set of potential strategic acquirers in mind from the very early days. And it's great to have that. That's something I didn't have in my first startup, and I still regret it because every other company that started with us doing pretty much similar things had much better outcomes than the pretty bad outcome that we had. So my advice to entrepreneurs has always been build those relationships, get out there, don't just put your blinders on and focus on what you're doing, but also look at the ecosystem, figure out where there could be synergies. And a lot of times, especially in physical AI, you need deep pockets and you need access to both talent, to infrastructure, etc., like Zooks. Honestly, I don't think would have been Zooks and you would see their cars out there if they hadn't been acquired by Amazon. And we've had this in other industries as well, like YouTube and Instagram. All these companies were burning cash up until the very last second that they got acquired. Then they got actually a second chance at life and they got scaled up. So strategic acquisitions like that make a ton of sense. And it's always good to have that in mind and build towards that. Now, if you don't need it, great. But you can't count on everything going your way all the time. Sometimes the market has a different idea, and it's great to have options.
I have a couple more questions, but please start thinking about your questions. We're going to pass the mic around in a few minutes, so 2-minute warning. As an operator, you're still an advisor to Pear VC. And what's the number one mistake that you see physical AI founders making in their seed pitch? And what would you fund tomorrow if you saw it?
I think one of the biggest mistakes I would say any founder makes in their pitches is not to talk up the team and the background of the team and the reason that they came up with the idea. That origin story is actually a lot more impactful than many people realize. And I would I would actually base my investment decision on how compelling that origin story is. It's hard to predict the future, and at early stage, especially when you're just putting a PowerPoint together or less than that. It's very hard for an investor to evaluate what you're envisioning, but they could evaluate who you are as an entrepreneur, as a founder, and how passionate you are. Are you the kind of person that's gonna try all different things in order for this vision to come into reality, or are you gonna give up at the first sign of difficulty? That to me is something that not enough entrepreneurs really describe in their pitches.
Yeah, I would fully agree. I think the best entrepreneurs I can think of, you think, okay, they went through a lot, and then you talk to them a year later and they're still going through, but they figured it out. They persevered and they didn't give up. So that's definitely something I would
just
underscore.
Not to toot our own horn, but like we almost died like 10 times. And we paid the last basically paycheck, like with account going to zero 10 times before we went public. And each time we had like somehow a lifeline was thrown at us. So we figured something out. This is actually in our public records. You can see in, I think, 2024, our bank accounts ended in $6,000. And then
as a public company already?
That we were still private. Yeah. $6,000 was December 31st, was in our bank account. Our burn rate at the time was about, I think, 200,000 a month or something. So we were already, as board members, like beholden to pay people's salaries. Because you're liable as a board member to pay the salary. But we put our necks out there, we believed in what we were doing, and somehow miraculously were able to make it work, at least to survive yet another day.
Raise your hand if you've had a tough December. So we already talked about capital intensity in robotics is brutal. Should physical AI founders be raising mega rounds early, going public early like you guys did, taking strategic money from NVIDIA, Uber, Magna, or something else entirely? What's the combo?
I love strategic investors. I feel like they really get it. When a strategic investor comes in, of course you have to structure the deal the right way and not give away everything in the process. But the rightly structured strategic investment can be a game changer for a company. In fact, I feel like our ability to go public was definitely enhanced by the fact validation we had by having these strategic investors behind us. They get it. Like a strategic investor wouldn't invest in you just for nothing, right? They have insights into the industry. They understand why this bet is worth making. And sometimes they're making a bet because they want to see that industry come into being. So definitely a big fan of strategic investors. I know there used to be, maybe there are less now, but there used to be a lot of entrepreneurs who would walk away from that because they thought they would like taint them, that they wouldn't be able to be acquired anymore, or no other customer would talk to them because the one customer invested in that. Like a lot of those fears are overblown. I'm happy to talk about that more, but it's all about how do you structure the deal. So for instance, with Uber being a strategic investor in us and actually having a Uber executive sit on our board, we were able to still strike a partnership with DoorDash. So you can still do things like that, but it just needs the right things need to be done.
Yeah, that's great. I think you should take up the advice and pick his brain on that, because strategic investors are one of the trickiest things and can take a long time, but it could be super valuable and validating to a company. Now, last question before we take it to the audience on talent. This is not an area where 50 companies will win because talent concentrates. Where is the talent actually flowing in 2026, and is it too late for a new entrant to assemble a winning team?
It's never too late. There's always great talent coming out of universities, especially with AI and the productivity tools out there today. Folks can do a lot, like less people can do a lot more. And so I don't think it's too late. I feel that you have to be thoughtful about it and very intentional about the kind of talent you want to attract. And I'm in my, like if I were to do one more startup, I would be looking at talent that's passionate and religiously passionate about whatever I'm about to do, because that's the best kind of talent that sticks around. Again, those 10 times that we almost died, we didn't lose a single employee because they were worried that they couldn't get a paycheck. They were like, we're sticking with this until the very end. We were 60 people. And so all of those team members stayed on, and we were transparent with them. They knew the financial troubles we had. So you want that kind of you want the kind of talent that so believes in what you're doing that they just feel like this is part of their life mission. And so one of the reasons actually we spun out and became independent was that we wanted to attract those kind of people, and it's harder to do if you're a project inside a bigger company. For startups, it's a lot easier, and I think that's a competitive advantage of startups. You can always find talent if you're working on something that you're deeply passionate about, and you can go even talk to folks at Anthropic or OpenAI, and they may be okay where they are, but they may find what you're doing a lot more resonant with their life's mission, and then they would join forces with you at much lower salary, but that happens all the time.